Hi everyone and welcome to a new video. In this video, I'm going to share with you a dividend stock that's down more than 33% since last year. But before that, I want to clarify that I am not a financial advisor and this is not investment advice, of course. The stock I am talking about is none other than PagSeguro Digital Ltd, ticker symbol PAGS. PagSeguro Digital Ltd, together with its subsidiaries, engages in the provision of financial and payment solutions for consumers, individual entrepreneurs, micro merchants, and small and medium-sized companies in Brazil and internationally. It provides digital banking solutions, including deposits, top-ups, debt management services, tax collections, wire transfers, ATM withdrawals, and various online and point-of-sale POS payment solutions, cards such as debit, credit, cash, prepaid cards, and credit products comprising FGTS withdrawals, payroll loans, working capital loans, and overdraft accounts. The company offers insurance services including account, card, home, business, health assistance, life and credit life insurance, investment services such as investment and portfolio advisory, financial education, brokerage, fund management, treasury, research services, and operates Shopping PagBank, a marketplace for various brands. In addition, it provides software solutions comprising PagVendas, a POS software app, Clubbag, a marketing tool that allows merchants to advertise across client base available for POS devices, and Plugbag, a wireless solution that connects the machine to the commercial automation system via Bluetooth technology. The company was founded in 2006 and is headquartered in Sao Paulo, Brazil. Its industry is software infrastructure, while its sector is technology, of course. PAGS currently has a market cap of $2.5 billion approximately. This is definitely a very big company. Their current P ratio is 7.55, which is really good considering their sector. Their forward P ratio is even better. It is 6.4. This means that they are expecting their earnings to grow. Looking into their financials and into their income statement specifically, it is obvious that the revenue is consistently growing, and not only that, it is growing extremely fast. Double digits growth on average. This is a very good sign. Another great thing about the stock is that they buy back shares. In the last few years, they bought back even more shares than they usually do. I can see that they slightly diluted their shareholders during 2020 and 2021, but back then the share price was nowhere near to the current price. So it makes sense. They are doing opportunistic buybacks, which is very smart in my opinion. Their basic and diluted earnings per share are also growing very fast during the last few years. They have managed to grow their EPS by double digits. They have only started paying a dividend recently, so they haven't managed to raise it yet. We have to see if they'll do it in the future. Now, let's continue with their balance sheet. Their cash and equivalents are $954.12 million, while their short-term investments are $658.37 million. So, in total, their cash and short-term investments are $1.6 billion approximately. This is a solid cash position, especially for a company of this size. They can use this money to invest back in their business so they can continue growing, or they can even pay some special dividends if they want to. Another thing that they could possibly do is to use this money to pay off some of their debt, which by the way is really bad. Their total debt currently is $4.57 billion. This is a huge debt. Their net cash debt looks a lot better. It is minus $2.957 billion, but it's still bad. They make a lot of money, so this debt shouldn't be a big problem with good management. I'll keep an eye on it, hoping to see some commitment on paying this off, and I will keep you updated, of course. As for its dividend stats, it has a relatively small dividend yield of 1.63%. For every single PAGS share you own, you will get paid 14 cents annually because its payout frequency is annual. Its current payout ratio is 11.73%. This means that they can easily afford their current dividend while also having at the same time a lot of room to start raising their dividends in the future. Its buyback yield is 2.1%. This is a solid buyback yield and it's some extra value to their shareholders on top of their dividend. This makes their shareholder yield 3.68%, not too shabby. Analyst consensus for PAGS is buy. This means that the analysts are very positive about the share price performance during the next 12 months. They give it a low estimate of $6.50, an average estimate of $11.63, a median estimate of $12, and a high estimate of $15.50. So, they are expecting the share price to change between minus 24.24% to 80.65% growth. Personally, I really like PAGS stock at the current valuation because both the revenue and earnings per share are growing very fast. They also buy back shares and pay a dividend. The only problem is that they have a huge debt. I believe that this stock has a lot of potential, but I don't think the risk to reward is there for me. First of all, I want to see their debt becoming smaller, and some dividend growth would also be nice. I am open to adding this stock to my portfolio in the future, but not at the current price. My target is $6. Below $6 would be ideal, if I still like their financials, of course. Let me know in the comments below what is your opinion about PAG stock. Do you maybe already own it? And also, let me know how is your invest journey going so far. Subscribe and turn the notifications on so you can see more videos like this one. Thanks for watching and have a nice day. See you in the next one.